Bitcoin ETFs, despite the pullback, despite the rocky October we've had, have still pulled in about $4.3 billion. It could still be a record month. I think the institutional bid for crypto is just persistent and not going away. That's what I hear in my meetings. That's what we see in the flows in our funds. That's what we see in the flow in our competitors' funds. And that to me is the overwhelming story. I will say we haven't revised our price forecast. So we haven't changed from saying we think it could still get to 200K. I think we have new all-time highs ahead of us before the close of the year.
Bitcoin sits just above $100,000, holding firm in a market defined by resilience and transition. The speculative mania of past cycles has evolved into something deeper, a slow but undeniable absorption of Bitcoin into the global financial system. It's no longer just a retail story. It's sovereign wealth funds, pension managers, and Wall Street quietly building positions, reshaping what mainstream adoption really looks like. The macro backdrop tells the rest of the story. Inflation remains stubborn. US debt has surged past $38 trillion, and the Federal Reserve is trapped between tightening too far and printing again. Around the world, confidence in fiat systems is eroding. Central banks continue to accumulate gold, and nations are exploring digital alternatives. A clear signal that trust in traditional money is fading. That's the environment where Bitcoin now operates. One where institutions are not just watching, but integrating. As Matt Hougan notes, Bitcoin has crossed the threshold from outsider asset to embedded financial instrument. It's being held, traded, and custodied by the same giants that once dismissed it. JP Morgan, Goldman Sachs, BlackRock, the very firms now preparing for a new monetary era where Bitcoin sits alongside the S&P 500. Yet the price remains strangely calm. Some call it consolidation. Others see it as the coiling spring before the next breakout. Hougan explains that much of this pause comes down to long-term holders, early investors and whales, still selling into key psychological levels around the 100,000 mark. That supply has created a temporary ceiling, but it's also masking the deeper trend, persistent institutional demand that hasn't gone away. Once that wall of supply is absorbed, he believes the move higher could come fast, an air pocket above the market that could send Bitcoin surging toward new highs. Stick around until the end, as we take a look at how institutional adoption is accelerating faster than most realize, why Wall Street's quiet accumulation could redefine Bitcoin's next decade, and what signals to watch as we approach the next major breakout. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, let's hear Matt's thoughts.
I mean, what we're seeing is continued demand. So the audience we serve, primarily professional investors, financial advisors, family offices, etc., institutions, sovereign wealth funds, there is persistent buying. And you see that in ETFs. Bitcoin ETFs, despite the pullback, despite the rocky October we've had, have still pulled in about $4.3 billion. It could still be a record month for ETF inflows this year, the best month ever if we get a strong uptick in the last week or so. So I think the institutional bid for crypto is just persistent and not going away. That's what I hear in my meetings. That's what we see in the flows in our funds. That's what we see in the flow in our competitors' funds. And that to me is the overwhelming story. Institutions wanting exposure. The question is, why hasn't the price reacted to that more? And I think that's a reasonable question to ask. My gut tells me I will say we haven't revised our price forecast. So we haven't changed from saying we think it could still get to 200K. Obviously, that would be an extraordinarily move. And even I think maybe it won't fully get there, but I think it's going to move directionally in that way because all the trends that would drive it there are in place. Regulation is still positive. Institutional demand is still positive. I think there is just this wall of existing holders who have been willing to sell and have kept the price down. But I think we'll close the year. I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run up towards 150 and then possibly beyond. And again, we haven't revised the $200,000 target because I still think there's a world where that's possible. Maybe it's not the base case, but I certainly think it's possible. We can see end of year melt-ups. We've seen them before. I think we could see them again. I think we've seen a few things. So one is you've seen long-term holders sell assets. That's just objectively true in the data. And I think that still anchors around the $100,000 price mark, which, as a reminder, if you look at sort of platforms like River and others, their two primary limit orders are at 100K-ish and $1 million. So I think those are two significant sell walls where existing holders are willing to sell. And I think the primary thing is it's just taken longer than we've expected to work through that. I do think there's been some rotation into digital asset treasuries. I think there's been some rotation into ETH and Solana and other smaller assets. But mostly, I just think that it's the $100,000 price target is probably the most important price level since we crossed $100. And so it's taking some time to work through the gravity of that price and release to the upside. I continue to think at some point, if we wear through the sell wall in and around 100K and get release, I think there's an air pocket up above. I think we could run up relatively quickly, but I've been surprised at how long it would take. I would share one note from gold, which I think I talked about a little bit on the Milk Road podcast. Everyone's saying gold is ripping. It's gone from $3,000 to $4,000 based on central bank buying. And that is true. But the other piece that is true is the central bank started buying in 2022 when the US seized Russia's assets. You saw central bank purchases double that year, and then they've stayed the same for 2022, 2023, 2024, and 2025. The interesting thing about that is it's only in 2025 that the price has really skyrocketed. And so I think what that tells you is that central bank demand had to wear through people who were willing to sell at lower levels before it exhausted that supply and the price took off. I think that may be a lesson for Bitcoin if we continue to see these flows into ETFs. Eventually, we'll wear through that supply. But yeah, we haven't yet. But as I said, we're not revising our target yet.
Bitcoin's evolution has entered a new chapter. The speculative frenzy of past cycles is fading, replaced by quiet institutional momentum. Wall Street, corporate treasuries, and sovereign funds are no longer standing apart. They're integrating Bitcoin directly into the financial system. As Matt Hougan explains, Bitcoin, crypto, and Wall Street are now aligned. It's being held, traded, and custodied by the same giants that once dismissed it. JP Morgan, Goldman Sachs, BlackRock, each building new infrastructure to meet commercial demand that can no longer be ignored. And it's not stopping there. JP Morgan's blockchain collateral platform, the rise of stablecoins, and growing nation-state adoption all signal that the monetary architecture itself is changing. What began as rebellion is becoming integration. Hougan's point is simple. This isn't Bitcoin losing its soul. It's Bitcoin expanding its reach. ETFs, custodians, and institutional wrappers are just new gateways. Over time, more investors will move from passive exposure to direct ownership, strengthening the network from within. The direction is unmistakable. Bitcoin has earned its seat at the global financial table, and from here, it's not about speculation anymore. It's about permanence.
Bitcoin, crypto, Wall Street are now aligned. It's no longer outside of the system entirely. It's now owned by many of the largest institutions. Every major Wall Street firm is building in this space. It's going to be accepted broadly as collateral. It's going to be traded alongside the S&P 500. It's going to be held in the same assets. It's going to be custodied by the same people. It's no longer going to be othered the way it was for the first 15 years. I think you're going to see more of these announcements, and then you're going to see the announcements of JP Morgan adding it to model portfolios. You're going to see the announcements of them offering trading and custody. You're going to see them launching their stable coins. It just goes to show you that we are firmly moving into the mainstream. If even they feel enough commercial demand to make this change, given all that they've said negatively about Bitcoin, think about what that says of the level of commercial anticipation for this. It's really remarkable. So, it's worth noting here in Bitcoin land, almost everyone's a convert. Michael Saylor was a Bitcoin skeptic in 2012. So we won't hold it against JP Morgan. They are welcome into the tent. The water is warm. It's great to have them. The first thing I would say is there's nothing about interacting with Bitcoin through the traditional financial system that makes it any less capable of offering you the ability to directly interact with it on a self-sovereign basis. So people wonder, like, is it bad that they're Bitcoin ETFs? No, you said the word free market. Bitcoin ETFs mean that you can access Bitcoin in an ETF, in a traditional financial wrapper, or you can access it on your ledger and do it directly yourself.
Yeah.
And that's just a matter of choice. And as long as the growth of ETFs doesn't impair this other piece of Bitcoin, its fundamental nature, then it's just strictly positive. And it's worth noting that many people who come into the market through things like ETFs will eventually decide that they want to own some Bitcoin directly on their own wallet, and they will, right? So this is actually strongly additive to the system. In terms of where it goes long term, I just think it's like I think the direction of travel is being a critical part of the global financial infrastructure. The degree to which it is the core of it depends on how fiat systems evolve and how other things evolve. And I think that's sort of unknowable, right? We can't be certain in a short time window what we'll see from traditional fiat systems or from Bitcoin itself. But what I think we feel confident in is it will be available globally. Everyone will feel comfortable accessing it. It will be liquid in every market around the world. And it will therefore be used in very interesting ways, maybe some commercial payments ways, maybe some international payments, maybe just investment, but it will have a seat at the table. It will not be sort of cast out of that lot. And if you believe, as I do, that it has many different applications, you think once it has a seat at the table, those applications will be used many times over. So I think it's a positive long-term direction of travel.
Bitcoin now sits at the crossroads of finance and history. What began as a challenge to the system is now being absorbed into it. JP Morgan, Goldman Sachs, and BlackRock are racing to expand their digital asset offerings, while nations like El Salvador and Argentina test Bitcoin's role in their economies. The forces that once resisted it are now reshaping themselves around it. Matt Hougan sees this as the natural progression of adoption, a shift from speculation to structure. The rails are being built: ETFs, institutional custody, tokenized collateral, and stablecoin infrastructure. Together they're forming the backbone of a new monetary network, one that coexists with and ultimately challenges the legacy system. And as global debt climbs, inflation lingers, and confidence in fiat currencies weakens, Bitcoin's appeal as neutral, scarce, and borderless money only grows stronger. The transition isn't coming sometime in the future. It's unfolding right now, in real time, across trading desks, balance sheets, and national policies. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.